Today, I want to go through GameStop's profitable Q4 earnings and also discuss how AMC's 2026 debt is about to be renegotiated before being paid off entirely. So stay tuned and let's make some money. The Easter sale at the Millionaire Mindset Trading Group is now live. Be sure to use code EASTER at checkout for $100 off the price of the lifetime membership, or 4 weeks for the price of 3, 25% off on the monthly membership, using the link in the description below. But now I'll dive straight in with the key information. So, Adam Aron yesterday tweeted saying the impressive forthcoming movie slate gives me increasing confidence in the potential for a solid industry box office later in 2024 and in 2025. Saying that the first part of 2024 is just a slog to wade through, given that the 2023 strikes delayed movie releases from early this year. As I've said before, cash is king. The smartest thing AMC did to survive during these past 4 turbulent years was to make sure we had the corporate oxygen available to us. And that oxygen for AMC, of course, is being cash in the bank. Saying as noted during our last earnings call, AMC is focused on extending our debt maturities and ensuring that our cash reserves remain robust. This is the recipe for success. Now I want to break down this tweet step by step and go through the interesting things that Adam Aron has touched on here. The first one being the Q1 box office. As Adam Aron notes, Q1 will be a bit of a slog to wade through given the 2023 strikes. He's therefore saying expect 2021 box office figures to be poor, but for those numbers to be pulled back up in Q2, Q3 and Q4. But actually the Q1 box office numbers actually aren't looking so bad. They're better than 2022 and better than 2021 and only slightly behind 2023, considering we had massive strikes lasting a huge portion of the 2023 year. That's not actually that bad. And he's also therefore suggesting Q2, 3 and 4 will exceed the Q2, 3 and 4 from 2023, aka leading to another profitable year. On top of that, AMC is focused on extending those 2026 debt maturities, which is the bear's case for shorting AMC. Many people are saying AMC can't repay their debt, won't repay their debt, won't renegotiate the debt, and will go bankrupt. But obviously this couldn't be further from the truth for many reasons. A, because AMC is already renegotiating that debt, meeting with Chinese lenders to discuss debt options, as of just last week. On top of that, Travis has said he believes the meeting with the financiers of the first lien debt went well, given Adam Aron is now mentioning the refinancing. That's obviously AMC's ultimate long-term goal, to get AMC back on track towards being debt-free, the largest theatre chain in the world, a profitable company, a successful company which undoubtedly will grow the share price. On top of that, I Carry the Torch tweeted saying the debt maturities will be extended because these banks and lenders can't afford to take losses they can avoid. Especially when we know these banks across the US and many banks across the world are taking on such significant losses due to the commercial real estate crisis. Especially Chinese lenders, because the entire property market in China is in smithereens, not just the commercial real estate sector, but even the public and private sectors too. These lenders really can't afford to take losses and must renegotiate debt even at lower interest rates. Because any banks taking losses right now will be banks experiencing bank runs and will be banks about to collapse. Not extending these loans hurts these lenders more than AMC. I also wanted to quickly go through the trade we took overnight on DJT, or yesterday it was DWAC. We got in around $45, $50 per share, and this morning it opened as high as $78 per share. You can see Firefly locked in 50% gains, Freak Deline locked in 32% gains, Alejandro locked in a $212 profit. On top of that, we also had Joe locking in a 160% gain on KULR as well, another play. And if you guys want to be locking in these 160% gains, be sure to join the Millionaire Mindset Trading Group using the link in the description below, remembering to use code EASTER, all in capitals, at checkout for that $100 off the price of the lifetime membership or 25% off the monthly membership. And as Adam Aaron has said, extending and repaying all of that debt is the recipe for success. As I touched on in one of my previous videos, the only 100% guaranteed way to cause a stock squeeze is by becoming a profitable, successful company. We've seen it happen time and time again with companies like Amazon, Nvidia, and many companies out there that were at some points down 99+%, but have now hit regular, recent, and many new all-time highs ever since. There's no reason AMC can't become like Amazon, being the largest theatre chain in the world in an industry that is growing. Of course, AMC renegotiating and extending and paying down that debt petrifies the short sellers. That's why they're still continuing to increase their short positions. I've touched on this number time and time again over the previous weeks, going from 18 million to 20 million to 22, 24, 25, 27, 29, 30, 33, and now 37 million shorted shares. Over the last 3 months, shorted shares, the legally disclosed shorted shares, and I guess those illegal synthetics are up 68.9%, or by 22 million shares in just the last 3 months. Now, the interesting part is that averages down the short sellers' short positions. As Stonks Batman has tweeted, he said over half of AMC's short interest, or over half of AMC's short sellers, have an average cost basis of just $5.30. Now, this is interesting for 2 reasons. A, because this is pressure building up in real time. This is how the shorts are suppressing their price by increasing their short positions. But it also means that because they're averaging down their short positions, when the price of AMC runs over just $5.30, the short sellers will be underwater. Those 90, 95, 98, 99% plus gains these short sellers were or are sitting on will all of a sudden turn into 0% gains and losses as soon as AMC runs over $5.30. Which puts us closer and closer to squeeze territory. As soon as AMC runs over this number, we are going to start seeing short sellers being stressed. We're going to see margin calls. We're going to see liquidations. Or, well, depending specifically on their leverage and how much of their portfolio is shorting AMC. It may need to reach over this number, it may need to reach double this number, it may need to reach higher than that before we start specifically seeing liquidations, but you understand what I'm saying. Now, Ape also tweeted a very interesting screenshot yesterday of GameStop in the after hours for the ask and the bid spread. Now, in yesterday's video, I touched on what happens when an infinite liquidity fairy doesn't fulfill a buy order. Yesterday with AMC, we saw an infinite liquidity fairy not fulfill a buy order at the market price at $4 or $5, but instead a small real sell order was picked up at around $20 per share. And this is what GameStop was showing yesterday night as well. It was showing a real small sell order at $174, aka where those infinite liquidity fairies weren't fulfilling an actual buy and sell order, but the real price or real orders were showing through. And this shows that if the infinite liquidity fairies cannot continue suppressing the prices of both AMC and GameStop rocket up very, very quickly. Now, Peruvian Bull has also gone through the bullish and profitable Q4 GameStop earnings. We can see for the full year, net income for GameStop was $6.7 million for 2023, compared to 2022's loss. Their adjusted EBITDA was also profitable at $64.7 million, compared to last year's loss again. So GameStop is now profitable in terms of adjusted EBITDA and also in terms of net income. Again, for Q3, net income was also positive at positive $63.1 million. Yes, sales were down slightly year over year, but it's brilliant to also see GameStop becoming profitable for the full year in terms of both adjusted EBITDA and net income as well. And especially as AMC renegotiates that debt, receives a lower interest rate, has less interest expenditure year over year, and pays down that debt, AMC will becoming more and more profitable through 2024 and 2025. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.